Ever wonder how your financial situation compares to the typical person's? How much money did the average person save for retirement? How much money do you make compared to other people's annual incomes? How much money do you spend? Looking at these numbers will help you understand your situation better, and will allow you to determine whether you are financially better off than the average individual. Pay close attention because a few of these are quite unexpected. Median income. Do you believe you make more or less money than the average worker when you go to work for your paycheck? According to the U.S. Department of Labor statistics, a full-time worker's median income was $1,041 per week or about $52,000 per year. This is almost $26 per hour before taxes based on a 40-hour work week. This income figure, of course, only applies to an individual and does not reflect the entire income of all household members, including spouses and their dependents. The median retirement savings for all adults was $65,000, based on the latest recent Federal Reserve statistics. All age groups are considered, however, only those who even have retirement savings are included in this figure. 1/4 of Americans do not actually have one. With a 4% safe withdrawal rate, this money would only provide $2,600 in annual income if used to fund retirement. The median retirement account balance for people under 25 was $1,786. A median balance of just over $14,000 was seen in the 25 to 34 age group, and it increased to approximately $88,000 for those 65 and older. These low figures are concerning given that the typical household will probably require at least $500,000 in addition to other sources of income to retire comfortably. You should be far better off than the typical person your age when it comes to retirement savings, if you only set aside a little portion of your income and invest it regularly. Social Security. The average monthly benefit, according to the Social Security Administration, is $1,550. For the majority of people who have nothing else set up for retirement, who rely solely on Social Security income, it will need to be supplemented with income from a job. Remember that the $1,550 average payment amount per month is only the average payment amount. People who did not earn much during the average year would likely receive considerably less. Others plan for retirement without taking into account the possibility that they may ever receive Social Security income, and instead view it as a bonus. Additionally, depending on your intended filing age, the benefit amount will change. On the Social Security Administration website, the majority of people can find an estimate of their benefit based on their prior wages. Spending. According to the U.S. Department of Labor statistics, the average household spends $5,577 each month. That amounts to nearly $67,000 in annual spending, so your household would need to bring in that much money each year just to get by. Major expenses like housing, transportation, and food, which often account for a sizable portion of the typical budget, are all included in that amount. More specifically, the average household spends $913 per month on transportation, $691 per month on food, and $1,885 per month on housing, or 34% of total spending. Credit score. The average FICO score is shockingly high at 715, according to Experian, with credit scores ranging greatly from as low as 300 to as high as 850. Despite the fact that some people underestimate the importance of having a decent credit score, the majority of people stand to gain significantly from having one. You should keep an eye on your score if you ever want to use debt of any kind. A credit score affects the terms of a car loan, other forms of potentially low-interest lending, and the mortgage rate you might be eligible for when purchasing a home or rental property. Fortunately, maintaining this number is rather simple, and you may achieve this primarily by paying your bills on time. According to Experian, your credit score is primarily impacted by your payment history, with your credit utilization ratio, credit history duration, types of credit you hold, and the amount of new credit following closely after. If you're getting value from this, we really appreciate it if you like and share this video. Debt. As said by WalletHub, the average household owes $9,260 in credit card debt, which is arguably the worst kind of debt you can have. The extraordinarily high interest rates associated with credit card debt are one of the significant factors. A credit card interest rate of 15%, 20%, or 25% is far higher than what you would ordinarily make by making stock market investments. Anything you might be investing in for retirement is fully offset by this. Credit cards also encourage unnecessary spending, so a large portion of that debt is undoubtedly the result of going overboard and purchasing things that weren't really necessary. Most of this debt is likely made up of random online purchases, clothes, electronics, small appliances, and other products with no residual value. Paying down your balances in full each month is the simple fix for this. Avoid making any purchases you can't afford to make or just use debit cards. Net worth. You should monitor your net worth so you can quickly see your growth as you accumulate wealth. Your net worth is a great tool to assess your financial health and identify any flaws. Your net worth is determined by adding up the value of every item you own, including your house, car, and other possessions, retirement funds, and then deducting all of your debts, such as a mortgage. You might be shocked to find that, according to the Federal Reserve, the median net worth of American households is roughly $122,000. The median net worth for people under 35 is less than $14,000. The median income for people aged 35 to 44 is $91,000. 45 to 54 is $168,000. 55 to 64 is $212,000. $266,000 among people aged 65 to 74. With a respectable income and some discipline, these net worth amounts are simple to surpass. Savings. The amount of money the average person saves changes from year to year depending on a number of variables, including the economy and others. Data gathered from the United States. According to data from the Bureau of Economic Analysis, Americans save 6% on average of their income after taxes. This money could be set aside for a new car, college, retirement, home improvement, or unanticipated expenses. This doesn't leave much money for retirement once all short- and medium-term savings goals have been achieved. Take into account that the typical new car costs over $47,000, the typical kitchen makeover is roughly $26,000, and the typical down payment on a home is $62,000. According to experts, people should save at least 10 to 15% of their salary, and even more if they intend to retire early, for their retirement. Additionally, you need to put money aside for other future purchases you'd like to make. Retirement. Everyone wants to have the option of retiring early so they won't have to devote the majority of their time to work, but according to Ramsey Solutions, the average retirement age is 61, even though the majority of people aren't even eligible to receive their full Social Security benefits until age 67. For additional context, the Social Security Administration estimates that a person who reaches the age of 65 can expect to live another 19 to 21.5 years. You've been in the workforce for about 4 decades when you retire in your early 60s. If you start investing early, you will have plenty of time to benefit from compound interest. However, does retiring at 61 leave you with enough free time to pursue your interests? There is a fair likelihood that you will be healthy and mobile by age 61, but how many more years can you anticipate being in shape enough to engage in your hobbies? It can be challenging to see your financial situation clearly, and occasionally it may seem as though you are hardly moving in the right direction. You're sure to be surprised by these financial statistics and gain some new perspective on your own financial situation. You can come to the realization that you're performing better than the average person in many aspects, which will encourage you to keep doing better. And I hope you do. If you want more videos like this, check out this video or this playlist. Don't forget to like, comment, and share this video. Subscribe if you haven't already. This is Financial Fortune, and thanks for watching.